Look, I need you to pay very close attention to what I'm about to show you, because what's happening right now in the silver market is something I've never seen in my entire career, and I've been watching these markets for over 2 decades. 3 weeks ago, something changed, the kind of change that doesn't make headlines immediately, but the kind that sends shockwaves through the entire financial system once people finally understand what it means. And right now, as I'm recording this, less than 2% of investors have any idea this is even happening. Let me paint you a picture. It's a Tuesday morning in London. The sun hasn't even come up yet. Inside a nondescript building in the financial district, there's a vault. Not just any vault, but one of the largest silver depositories in the world. Every morning at 6 a.m., the same ritual happens. Inventory checks, reconciliation, making sure every single bar of silver is accounted for. But on this particular Tuesday, something was different. The numbers didn't add up. Not by a little. We're talking about millions of ounces that should have been there, but weren't. Now, you might think this is just an accounting error, a clerical mistake that gets sorted out by lunch. But here's what makes this absolutely terrifying. It wasn't an error. The silver was gone, physically removed. And when they started digging into where it went, they discovered something that should make every single person watching this video sit up and take notice. The silver didn't go to industrial users. It didn't go to jewelry manufacturers. It went to private buyers. Wealthy individuals and family offices who are taking physical delivery and moving it into private storage, away from the banking system, away from the official markets, into vaults that don't report their holdings to anyone. Now, why does this matter? Because silver, unlike gold, is not just a monetary metal. It's an industrial metal. It's in your phone. It's in your solar panels. It's in every electric vehicle battery. It's in medical equipment. It's in water purification systems. The world literally cannot function without silver. And yet, right now, the people who actually need silver to manufacture products are starting to panic because they're realizing something absolutely critical. There might not be enough to go around. Let me give you some numbers that should make your jaw drop. Global silver mine production last year was roughly 830 million ounces. Sounds like a lot, right? But here's the problem. Industrial demand alone consumed 650 million ounces. Investment demand took another 250 million ounces. You don't need to be a mathematician to see the problem here. We're consuming more silver than we're producing, and we have been for years. But it gets worse. Much worse. Because unlike gold, which mostly just sits in vaults after it's mined, silver gets consumed. It gets used up in industrial applications where it's not economically viable to recover it. Every year, millions of ounces of silver effectively disappear from the available supply, forever. It's gone, vaporized into products that end up in landfills. Now, you might be thinking, okay, but surely there are massive stockpiles of silver somewhere that can make up the difference, right? And that's exactly what I thought too, until I started digging into the actual data. And what I found should terrify anyone who understands what this means for the global economy. The COMEX, which is the primary exchange where silver futures are traded in the United States, had roughly 350 million ounces of silver in its vaults at the peak in 2021. Today, we're sitting at around 270 million ounces. That's a decline of 80 million ounces in just a few years. But here's the really interesting part. Of that 270 million ounces, only about 70 million is actually available for delivery. The rest is spoken for. It's already owned by someone who's just using the COMEX as a storage facility. So let's do the math. If industrial users need 650 million ounces per year, and investors want another 250 million, and we're only producing 830 million, where's the shortfall coming from? It's coming from existing stockpiles, from government reserves that have been quietly sold off over the decades, from scrap recycling, from whatever silver can be scraped together from wherever it can be found. But here's the thing about stockpiles. They're finite. And right now, we're watching them drain in real time. The London Bullion Market Association, which oversees the silver market in London, reported that vault holdings dropped by 15% in the last 6 months alone. 15%. In 6 months. That's not normal market activity. That's a run on the vaults. And it's not just happening in London. It's happening in Zurich. It's happening in Singapore. It's happening in New York. Everywhere you look, physical silver is being withdrawn from the official system and disappearing into private hands. And the people doing this? They're not talking about it. They're not bragging on social media. They're quietly, methodically, accumulating as much physical silver as they can get their hands on. Now, I want you to think about what this means, because this isn't just about the price of silver going up. This is about something much more fundamental. This is about the realization, among a small group of very wealthy, very well-connected people, that the official narrative about silver supply is completely wrong. That the market is far tighter than anyone in the mainstream financial media is willing to admit. And that when the shortage becomes undeniable, the price is going to do something that most people think is impossible. Let me tell you a story. Back in 1980, the Hunt brothers tried to corner the silver market. They accumulated massive positions in silver futures and took physical delivery of as much silver as they could. At the peak, they controlled roughly 100 million ounces of physical silver. And you know what happened? The price went from $6 an ounce to $50 an ounce in less than a year. Now, the Hunt brothers eventually got crushed because they were using leverage, and the exchanges changed the rules on them. But here's what's different today. The people accumulating silver now aren't using leverage. They're paying cash. They're taking physical delivery. And they're not doing it to manipulate the market. They're doing it because they understand something that most investors don't. Silver is the most undervalued asset on the planet right now. And when the market finally wakes up to the supply shortage, the price isn't going to $50. It's going to go much, much higher. Think about it this way. Gold is trading at around $2,650 an ounce right now. Silver is trading at around $31. That's a gold to silver ratio of about 85 to 1. Historically, that ratio has averaged around 60 to 1. But here's the thing. Silver is far more scarce than gold when you account for above-ground stockpiles. There's roughly 2.5 billion ounces of gold in the world that's available for investment. But silver? Maybe 2 billion ounces. And remember, silver is being consumed in industrial applications while gold just sits in vaults. So if you adjust for actual available supply and industrial demand, silver should be trading at a much higher ratio to gold. Some analysts argue it should be 30 to 1. Others say 15 to 1. If silver were trading at a 30 to 1 ratio to gold right now, it would be at $88 an ounce. At 15 to 1, we're talking about $176 an ounce. And that's just based on historical ratios, not accounting for the supply shortage that's developing right now. But let's bring this back to what's happening in those vaults, because this is where the story gets really interesting. You see, the silver market operates on something called fractional reserve. Just like banks don't actually have all the cash that's deposited with them, the silver exchanges don't actually have all the silver that's supposedly available for delivery. They operate on the assumption that most people who buy silver futures will never actually take delivery. They'll just settle in cash. And for years, that assumption held true. Maybe 1 or 2% of futures contracts actually resulted in physical delivery. But something changed in 2020. Suddenly, delivery requests started spiking. First it was 5%, then 10%. Now we're seeing delivery requests on 20% or more of contracts in some months. And the exchanges are scrambling to find the physical metal to deliver. This is creating a situation that's never existed before in the silver market. Because when you have this many people demanding physical delivery, and the vaults are already running low, you create what's called a squeeze. The price has to go up to incentivize holders of physical silver to sell. But here's the problem. The people who are taking delivery right now aren't planning to sell. They're planning to hold. For years. Maybe decades. Now, quick aside here, because this is relevant to a lot of people watching this. If you're sitting on $100,000 or more in retirement accounts, you might want to look into how gold and silver IRAs work. I put together a free guide that covers how to get physical precious metals into your retirement account without tax penalties. It's in the description below. Worth checking out if you're thinking about protecting your retirement savings from what's coming. Anyway, back to what's happening in these vaults. So we've got a supply shortage developing. We've got vaults draining. We've got delivery requests spiking. But there's another piece to this puzzle that makes the situation even more explosive. And that's the role of central banks. Now, Most people think central banks only care about gold. And it's true, they've been buying gold at record levels. But what most people don't know is that several central banks have also been quietly accumulating silver. Not in the massive quantities they buy gold, but enough to be significant. And more importantly, they're not selling. The days of central banks dumping silver onto the market to suppress the price are over.
Why? Because central banks are starting to understand the same thing that wealthy private buyers understand. Silver is strategic. It's not just a monetary metal. It's a critical industrial metal that's essential for the green energy transition, for military applications, for technology. And in a world where supply chains are fracturing and countries are trying to secure their own sources of critical materials, silver is becoming a national security issue. Think about what happened with rare earth elements. For years, China controlled 90% of global production. Then they started restricting exports, and suddenly, every other country in the world realized they had a massive strategic vulnerability. The same thing is starting to happen with silver, except silver is even more critical because it's used in so many more applications. And here's where this gets really interesting from a geopolitical perspective. The largest silver-producing countries are Mexico, Peru, China, Russia, and Poland. Notice anything about that list? Half of those countries are either adversaries of the United States or are in regions with significant political instability. What happens if Mexico decides to restrict silver exports to prioritize domestic industrial needs? What happens if there's political upheaval in Peru that disrupts mining operations? What happens if China decides to use silver as a bargaining chip in trade negotiations? The United States would be in serious trouble, because we don't produce nearly enough silver domestically to meet our industrial needs. We're completely dependent on imports. And if those imports get disrupted, entire sectors of the economy would grind to a halt. You can't manufacture solar panels without silver. You can't build electric vehicles without silver. You can't produce advanced electronics without silver. This is why smart money is accumulating physical silver right now. They're not just betting on the price going up because of investment demand. They're betting on silver becoming a strategic resource that countries will fight to control. And when that happens, the price isn't going to be determined by supply and demand in the traditional sense. It's going to be determined by how much countries are willing to pay to secure their supply chains. Now, let me show you something that should make all of this crystal clear. In 2011, silver hit $49 an ounce. At that time, global industrial demand was around 480 million ounces per year. Today, industrial demand is 650 million ounces per year. That's a 35% increase. But the price of silver today is $31. It's actually lower than it was in 2011, despite demand being massively higher. How does that make any sense? It doesn't, unless you understand that the price of silver has been artificially suppressed through the futures market, through massive short positions held by a handful of large banks, through paper silver that doesn't actually exist in physical form. But here's the thing about artificial suppression. It can only last as long as there's physical metal available to deliver when people demand it. And right now, that physical metal is disappearing. The banks that have been shorting silver are starting to realize they have a problem, because if they can't deliver physical metal when it's demanded, they're going to have to buy it on the open market to cover their positions. And when they start buying, the price is going to explode. We're talking about a short squeeze that could make GameStop look like a minor blip. And there's evidence this is already starting to happen. Look at the price action over the last few months. Silver has been steadily grinding higher, even as the stock market has been volatile and other commodities have been weak. That's not normal. Silver usually moves in correlation with other risk assets, but right now, it's moving independently. And that tells me that there's real physical buying happening underneath the surface. Buying that's overwhelming the paper selling in the futures market. Here's another data point that should get your attention. The U.S. Mint reported that Silver Eagle sales in the first quarter of this year were up 40% compared to the same period last year. 40%. And premiums on physical silver coins and bars have been elevated for months. You're paying $5 to $8 over spot price just to get your hands on physical silver. That's a sign of a tight physical market. But it's not just retail buyers. Institutional buyers are getting involved too. We're seeing reports of large orders, 100,000 ounces or more, being placed with dealers and refiners. And the wait times for delivery have stretched from a few days to several weeks in some cases. That's not normal.
That's a sign that the supply chain is stretched to the breaking point. Now, I want to talk about what this means for you, because if you're watching this video, you're probably wondering whether you should be buying silver right now. And my answer is this. If you understand what's happening, if you can see the supply shortage developing, if you recognize that the price is artificially suppressed and that suppression can't last much longer, then yes, you should be accumulating physical silver while you still can at these prices. But here's the critical thing. You need to buy physical. Not paper silver, not ETFs, not futures contracts. Physical silver that you can hold in your hand or store in a vault that you control. Because when the shortage becomes undeniable, when the price starts to spike, the paper market is going to break. There's going to be a massive disconnect between the paper price and the physical price. And if you own paper silver, you're going to get crushed. We've already seen this happen in other markets. In 2008, during the financial crisis, there was a period where you literally could not buy physical gold at anywhere near the spot price. Dealers were sold out. Premiums were 20%, 30%, even 50% over spot. The paper price said gold was $800 an ounce, but if you wanted to actually buy physical gold, you were paying $1,000 or more. The same thing is going to happen with silver, except it's going to be worse because the silver market is smaller and less liquid than the gold market. Think about the implications of that for a moment. If you're holding paper silver when the market breaks, you might get paid out at the paper price. But you won't be able to buy physical silver at that price. You'll have to pay a massive premium. Or worse, you won't be able to buy it at all because there won't be any available. The people who own physical silver will be able to name their price. And trust me, it's going to be a lot higher than $31 an ounce. This is why the wealthy families and institutions that I mentioned earlier are taking delivery now. They're not waiting for the price to spike. They're not trying to time the market. They're accumulating physical metal while it's still available at reasonable prices, because they know that once the shortage becomes obvious to everyone, it's going to be too late. And here's the thing that keeps me up at night. We're closer to that moment than most people realize. The vaults are draining. The supply deficit is growing. The delivery requests are spiking. All the pieces are in place for a massive price explosion. The only question is, what's going to be the trigger? Maybe it's a major industrial user announcing they can't get enough silver to meet their production needs. Maybe it's a country imposing export restrictions. Maybe it's a large bank failing to deliver on a futures contract. Maybe it's just the slow realization among investors that silver is the most undervalued asset in the world right now. Whatever the trigger is, when it happens, the move is going to be fast and violent. I've been in this business long enough to recognize when something big is about to happen. And every instinct I have is telling me that we're on the verge of a historic move in silver. The kind of move that creates generational wealth for the people who position themselves correctly, and destroys the people who are on the wrong side of the trade. So here's my advice. Don't wait. Don't try to time this perfectly. Don't wait for confirmation from the mainstream media, because by the time they're talking about it, the move will already be over. Start accumulating physical silver now. Dollar cost average if you want to spread out your risk. But get exposure to physical silver while you still can at these prices. And remember, this isn't just about making money. This is about protecting your wealth from what's coming. Because when the silver shortage becomes undeniable, when the price starts to spike, it's going to be a symptom of much larger problems in the global economy. It's going to be a sign that the supply chains we've taken for granted for decades are breaking down, that the financial system is under stress, that the world is changing in fundamental ways. Silver is your insurance policy against that chaos. It's your way of preserving purchasing power when paper currencies are losing value. It's your stake in a physical asset that has intrinsic value and can't be printed into existence by central banks. And right now, while everyone else is distracted by stocks and crypto and real estate, you have a window of opportunity to accumulate it at prices that are going to look absurdly cheap in hindsight. The vaults are draining. The shortage is real. The price suppression can't last much longer. And the people who understand what's happening are taking action right now. The question is, are you going to be one of them? Or are you going to be one of the people who looks back in a year or two and wishes they had paid attention when they had the chance? The choice is yours. But don't say you weren't warned. Because what's happening in those silver vaults right now, right under our noses, is going to reshape the precious metals market in ways that most people can't even imagine. And the time to act is now.
before the rest of the world wakes up to what's really going on.